Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action on the 1 hour, 1 day and 1 week timeframes. We'll be jumping into some data, recent news and events and things that are going on around BTC, jumping into what's going on with some trade ideas as well. Now as we get into today's video, if you find it useful and informative, hit the like button. I really do appreciate that. If you are new to the YouTube channel, why not go ahead and subscribe by tapping the bell and selecting all the notifications. You will be kept up to date with everything that we do here at Cheeky Crypto. If you're watching this on Twitter, give us a follow. Make sure you do give us a retweet as well. It does help push the content out to more like-minded individuals. And so let's get right down into this video. Let's keep it nice and brief and on point. So kicking things off with the 1 hour time frame. Here we have Bitcoin paired up with USDT on the BitGet spot exchange 1 hour time frame. And we saw a big move to the downside, big shift on BTC. Our original target range, which we actually did bounce from quite nicely, was at 28,968 to 29,066, sorry. You can see that we came to this low side, we bounced up, and then we came down quite aggressively again. Now, this has shifted our entire structure, so we are going to have to basically transform these no longer into corrective patterns, but into impulsive patterns, okay? And these are the difference between what is a trend and what is essentially just a short-term correction. We are now, in my opinion, trending to the downside. And so we need to kind of consider what that might mean for the future of Bitcoin here. And so what we're going to do is we're going to measure this distance right here. Okay, that's going to be a one wave. Here you can see that this hits the 1.618, okay, and becomes our wave 3. We're currently into the wave 4, meaning that we have further downside to go. Let me show you what I mean. So here we have a wave 1, which I believe to be a diagonal, wave 2 coming up, a wave 3, up here to wave 4, got to have a wave 5. Now all of that is a wave 3. Let me show you. Over here, we have our wave 1, we have a wave 2, all of this is our wave 3, going up into wave 4, down into a wave 5, right? And so Bitcoin's move to the downside here is it's getting close to finishing, but it's not quite where it needs to be. You can see this is our corrective structure coming down, this going up, and then a 5-wave move coming down like this. It's a 3-3-5, it's a flat correction pattern. So once we finish this, my expectation is going to be that we end up going up quite significantly. But before we do that, we're going to experience, unfortunately, a little bit more pain for Bitcoin. Right, now wave 4, and we're going to remove this one for now, right? But this wave 4 right here, this is usually 38.2% retracements of our entire wave 3. And that is right where we've gone up to right now. So although we can push up a little bit higher here, we have already kind of met our typical expectations of a wave 4. Now, invalidation, what is going to prevent us from going down into this 5th wave movement? Price action has to go up higher than our wave 1, which would be 28,961. Okay, so wave 4 is not allowed to cross there. So for the most part, we know that we've kind of reached our typical wave 4 at the moment. We know that if we were to go up higher than 28,961, then actually we're not expecting further downside on a 5th wave movement. We can go down in a different pattern, but it just means that we overextended in a C wave pattern here. And for the most part, if we do not go higher than 28,961, then obviously we have to move on down. Now, typically, I remove that fib, we go down between the higher that wave 4 goes, the lower that wave 5 goes, by the way, guys, right? But if we take the existing high at the moment, our 5th wave target range sits between the 1.236 and the 1.618, so 28,126 and 28,262. Okay, so that's going to be the area there. I'm going to remove the fibs, we don't need that. And there's our target range. Okay, that's the first one. That's a wave 3. We then go up, obviously, into 38.2% retracement for wave 4, then down into the final 5th wave movement. Okay, so from our hourly time frame, we're bearish right now. It's hard to be bullish on this one. We've got a change of characterization that is, in fact, in a bearish state of play. We're yet to see a confirmation of this. This will probably happen when we move up, and then we get that break coming back down. So I think ultimately that's kind of where that's going to sit. We've obviously chewed through this previous area here. This area was a fair value gap. We've just taken that out now, so we can go ahead and remove the fair value gap that was there. So we've kind of retraced into that one. There are, of course, all of these fair value gaps, as you can see here, it was still in play. So we've still got some fair value gaps to kind of grab out on our hourly chart. So it's not kind of like we're done yet. I think those fair value gaps can come at any point in time. They're not a guarantee that we even hit them, but they're there, and we have to kind of keep an eye on them nonetheless. So that's our hourly time frame. A lot of volatility was seen here. This obviously had a major effect on altcoins, really crashing down quite a bit. A little bit unexpected for it to go and turn into an impulsive movement right at the end here, but it is what it is. Ultimately, if we take a look at this entire structured move here, that three-wave move, into this one, then our target range actually comes down to the 38.2% retracement. Now, because it would be a five-wave structured move coming down, and if we were to hit 27,947, which is potentially possible, then we can look at this maybe as our diagonal. This is another impulsive break, and we really are going to be breaking down for Bitcoin at that point. So some caution has to be applied there. Let's take this up into the daily time frame. The daily time frame, as we've been talking about before, we have this B wave potentially coming down to our 200 EMA. The 200 EMA at the moment sits at the 27,311. Now, I suspect that this 200 EMA will still lift up a little bit further. We're probably more in line with our trend line, which is obviously coming on the lower side, where I think we're probably going to be more around the 27,700. But that 200 EMA, we could see a wick down into that range before we start to see a move upwards. The move upwards at the moment obviously is still targeting out the $35,000 to $37,000 range. That hasn't changed. So you can see here on our daily time frame, all these micro movements, these kind of small crashes and dips and drops that we see on the hourly time frame, they're all great and everything, but it doesn't really have terribly too much of an impact on those larger time frames, not at the moment anyway, right? And we can see that price action was expected to pull back down on this daily time frame. It's correcting down quite nicely. Okay, we've still got a little ways to go. And again, there's no guarantee that we do come all the way down to that 200 EMA, but it's something that is, previous areas of support that, if we're going to find support, it's going to be in this range. We can also note that we're in this area of consolidation right in here, yeah? This particular area between the price of 28,294 and 29,176 is a previous area of resistance that can turn into support. So we are looking for this run to the upside. We're just waiting to find that good level of support, right? That's essentially kind of what we're looking for. And we will eventually get there. I think it's just got to be more patient. We've got to let it kind of play out. Now, the other thing that we can note here is that we're finally back down in this oversold area on the daily stochastic RSI. And again, this is another positive sign that's going to show us with a shift of momentum back to the upside. So although the bears are probably going to be feeling really confident with themselves, and I know I get a load of comments saying that I'm a perma bear or whatever, I just follow the data. Data tells me I'm going down, great. And if the data tells us that we're likely to go up, we're going up, great, fantastic. I don't really care if we're bulls or bears. Essentially, all I care about is which direction is Bitcoin going and can I profit from that, right? So in the case here, we can see that, we're in the area at the moment where we're finding reasonable support. Based on the hourly patterns that we're likely to lose these, and we're likely to come down more towards that 200 EMA before we actually have that opportunity to go to the upside. So in there, it's going to be opportunity for many altcoins to be profited from a trading point of view. Now, I am bearish overall because once this happens on a bigger macro, such as the weekly, well, I don't think it's going to hold, right? So we go up into that kind of $35,000, $37,000 area. As you can kind of see here, this is the area of previous support that I think is likely to turn into an area of resistance. So basically, 200 EMA on our weekly time frame actually sits way too low at the 25,000, but the 27,000 is the 50 EMA up there. I think we find support on the 50 EMA on the weekly, or the 200 EMA on the daily, about the same levels, and then we come down towards 20k. As you can kind of see, this curvature line at the bottom here, and I'll probably talk about this more over the next few days, as you can kind of see, has good support levels being found across the years, right? Yet we haven't even tapped down on this one. So it's one of those. Are we expecting a big, massive move to the downside, big crash to the downside? I think there's a lot of people that are suspecting big movements to the downside across the stock market, and I think that's going to also have an impact on Bitcoin as well. So I think, it's possible that we could potentially come down into a new lower low. I thought we've been saying this for months, pretty much since the beginning of the year, when we started to see not a very decent structure coming up here. We just see corrective structure going up. This basically allows me to think that, we have the ability to come down into a new lower low. Not a guarantee though, because $20,000, I want to see how price reacts there, because I do think we have to go down to a minimum of 20,000. If we hit 20k and we bounce strongly, I think we probably have bottomed at that point. If we come down to 20k and we find that it's weak and we basically lose that area, and then we look to come down towards the kind of 17 to 18k range, if you lose that, there really isn't a lot of support to be found afterwards. I think then you are going to be moving down more towards $12,000. That's going to be this area of previous support in this lower range, and that's going to coincide with our trend line that spans from the very early days for Bitcoin. Okay, and if I zoom back out of this, you can see it starts all the way over here in 2011, connecting all of those low points together. If we are to see another low point where it kind of connects, then it's going to be about 12,000 USD. So it's going to be an interesting one, right? To see how that one plays out on the weekly time frame. I suspect that we're going to push up into that kind of 34 to 37k and then down to 20, and how it reacts at 20 is going to be, I think, what determines whether a new lower low occurs. Again, I'm not a big fan of trend lines, so although I've drawn these on here, and these are literally drawn on, this is not an indicator, and it's literally just going to be a case of, okay, well, are we rewriting history? I think we are, personally. I don't think we're going to see exactly the same things that have happened previously. As they say, this time is different, but I think ultimately we've got a lot of underlying variables that are different, and I'll talk about those in another video as well. I've spoken about them dozens of times already. Let's go ahead and move this up though into data and news, which I find quite interesting. So over on our membership website, so membership.𝗕𝗘𝗪𝗏𝗀𝗧𝗏.io, this is where we have a lot of different things available for our members. We have a 7-day free trial across all of our plans, lots of different benefits from video content through to AMAs, through to technical analysis on request, trading alerts, buying and selling, and what the team's doing, so much, right? I can go on and on and on about it, but ultimately we're only here for one thing today, which is to go to the data zone and go to the Bitcoin on-chain data. And I'm going to load that up. So the Bitcoin on-chain data helps us understand a few things. And there's a few things here that I need to talk about, because in the news, there's something that I disagree with. And I'm going to show you why with data, because that's how I rock and roll. So we have this overview here. Okay. We have the all-time high, $69,000. It's been 644 days since that all-time high. We're currently 58.3% down from the all-time high. The inflation rate yearly is at 2% at the moment, okay? And obviously during a Bitcoin halving, that's going to be halved to 1%. And we argue whether or not increasing the supply of Bitcoin by 2% really has an impact on the supply and demand metrics. I'll leave that one for you, but we'll come back to that in a moment. The daily inflation rate is at 0.0055%, meaning that yesterday we saw, or in the last 24 hours, I should say, we saw 1,068 Bitcoin being minted, right? We obviously have the hash network, or the network hash rate down here at 419,000. We also see that the fees paid were $536,000 in the last 24 hours for 581,000 transactions, over 1 million active addresses in the last 24 hours. Out of the 48.5 million addresses. So these overview stats, right, what do we look at? Well, we have the circulating supply at 19,459,612 BTC. Okay, and we issued 1,000 and more. Okay, so, and the reason I'm going to be talking about these things specifically is because in the news, there's this, right? Bitcoin supply crisis would cause a trigger, would trigger Bitcoin bull market even if ETF bids get denied. Okay, a crypto analyst predicts. So let's come back to my data here for a second, right? So a supply crisis, right? And we can see that there's 19,459,612 BTC in circulating supply, right? We know that actually a large chunk of that is potentially lost. It's a pretty sizable chunk, actually. And Bitcoin that hasn't moved in over 10 years, right? But we did see some dormant Bitcoin actually wake up as well, which is quite interesting. If we come on over into the wallet side of things, right, we have 10 different wallet sizes for Bitcoin. On the lowest side, we have Bitcoin wallets that have over 0.001 BTC, dust, essentially Bitcoin dust. There are 23 million wallets that have over 0.001, right? Now, if we come over to our overview again, we know there's 48 million accounts or 48 million addresses, which means that less than half of those actually have Bitcoin greater than 0.001. This tells us that actually there isn't that as many active accounts, right? We know there's not that many active accounts. And we also know that actually half of the total accounts actually have Bitcoin. The other half don't, right? Nothing meaningful in any way, shape, or form. I find that very interesting. And as we kind of crew up here a little bit further, 0.01 Bitcoin is only 12 million accounts, which means out of the 48 million, you're really whittling this down quite aggressively, right? So people say there's 48 million Bitcoin wallets. That's great, but how many of them actually have Bitcoin in them? It's not as many as that, is it? And so when we go up here, we have 4,434,806 wallets that have over 0.1 Bitcoin. So 10% of a Bitcoin, 4.4 million. Okay, 1 Bitcoin, 1 million wallets. Okay, and now this is where we're going to start getting into this. How much supply is kicking around in some of these smaller wallets, right? Now, these wallets, the smaller side of the spectrum, I'd probably say anything between kind of, dust and 10 Bitcoin are the ones that are going to be ones to monitor. Okay, these are usually going to be retail investors, typically retail investors or high net worth individuals, investors who will look at this through a slightly different lens than your institutional investor or your seasoned high net worth individual, or someone who's kind of really used to the stock market and investments and kind of this is bread and butter, right? So people who kind of are trading, such as the 100 Bitcoins, or your institutional players at your 1,000 Bitcoins and your 10,000 Bitcoins. What we're talking about here is basically all of the dust and the low end of the spectrum for Bitcoin. Even 10 Bitcoin here, just a high net worth individual, right? 10 Bitcoin today would be about $280,000, right? It's not out of the wheelhouse of a high net worth individual or a retail investor to be able to do that. However, one of the things that we need to consider here is that actually that's a pretty sizable amount of Bitcoin sat in this area, right? If we just take the 10 Bitcoin and we take the 1 Bitcoin, we're talking about 2 million BTC sat just there, right? So 2 million Bitcoin sat in what I would dub an emotional demographic, right? These are people who are going to overreact to the price action of the market, and so that's quite concerning, right? And obviously we can see here another 2 million, or actually it's not even going to be that, is it? But 4.4 million with 0.1 Bitcoin in there is also going to be an interesting mix. So as you can see here, across all of these levels, there's actually a sizable amount of that circulating supply. Okay, so a certain amount of that circulating supply is sat in the emotional bucket. And then we have the more logical, analytical buckets, these being the 100 Bitcoin, the 1,000 Bitcoin, the 10,000 Bitcoin, the 100,000 Bitcoin. Now, these are wallet accounts and usually typically institutional players with analytical tools that are helping them to kind of decide what actions to take, right? Essentially, that's kind of how I look at this. You've got the 100 BTC being your traders. These ones are aggressively following price action. As you can see, over the last 365 days, although they're all down in wallet counts, as in they're selling their Bitcoin, you can see that they're actually very flat across the board, right? 15,000 accounts with over 100 Bitcoin in them, right? And we can acknowledge that for the most part, it's not like it's huge swings up and down or coming in and out of Bitcoin in large droves. It's actually relatively flat, meaning they're just following the price action. They're coming in, they're coming out, they're taking profits, they're grabbing liquidity. And on the larger side of things, you can see that these are actually more aggressively down, 6.23%. And so we see great movements in accumulating on the emotional side, but the analytical side, not so much. They're not so much accumulating, right? And so that brings me back to the news, right? Because this news is basically saying, regardless of the ETFs, whether they get approved or denied, there's going to be a bull market. And essentially what they're talking about here is that the Bitcoin halving event is going to happen, and it's going to halve the amount of Bitcoin that is going to be mined, and that's going to cause a bull market. It's happened in the past, it's going to happen again, right? And what I want to do is I want to come back to my data here, and I want to kind of come into here and I say, okay, we've got 19,459,000 Bitcoin, right? We're issuing an extra 1,000 a day, approximately. It actually changes, it fluctuates, right? Inflation rates are currently 2% in a year. And do we think issuing, 2% is really going to actually have an impact on the Bitcoin circulating supply when there's already 19 million out there out of the 21 million, right? And then do we think that the shrinkage of Bitcoin to 1% annually is going to create a bull market? or is actually so much Bitcoin now out in circulating supply that the halving is really insignificant, right? And we kind of got data here to say, okay, taking it from 2% to 1%, annual inflation is really minor to the circulating supply. The circulating supply is what matters here. And unfortunately, a large chunk of that circulating supply sits with the emotional investors. Okay, the retail investors that are going to overreact to price movements. Either they're going to FOMO in, which we have seen because prices moved up rapidly from their current existing low, or they are going to panic sell as things start to really crumble down around them. And there's a lot of fundamental reasons as to why a retail investor might have to actually sell at a loss as well. Some of this will be down to what is actually going on in the real world. We see recessions cropping up all over the place, which is an inevitability in many countries, even if they want to deny it. All the way through to the interest rates causing some really serious problems in the housing market, in the residential and in commercial property. Real estate is also causing some issues in terms of the fact that a lot of people are working from home, lots of people are losing their jobs. We've seen so many layoffs in the latter part of 2022 and early part of 2023, all the way through to some of the other things such as a Fed pivot, which usually causes a crash in the markets. We see a $1.6 billion short going on the stock market from some well-renowned people, and I think ultimately this isn't going to be like a clean cut. Oh, look, we're going into a bull market in 2024. And sure, I would love to see that. But we've gone through this many times already, and I'll go through it again, I think, tomorrow, talking about why the Bitcoin halving event really is not what retail investors believe it is. Okay, it used to be really impactful, but in reality is the bull market starts way before the Bitcoin halving event, and more often than not, the Bitcoin halving event actually has a negative impact on price action. It's more of a sell the news event. It's not a catalyst for anything. Ultimately, taking your inflation from 2% to 1% annually is really minor now. It's not a major thing. It's a minor thing. And we have to consider that actually the majority of the supply of Bitcoin is already out there, and you should be focusing on the current supply of Bitcoin, not on whether new Bitcoin that is issued goes from 800 Bitcoin a day to 400 Bitcoin a day. Ultimately, it's going to actually squeeze the mining operations quite aggressively, and that could be a problem. But for the most part, I don't suspect we're going to see this as a big catalyst for a bull market. Now, if you look at the previous two halving events, I'd say the last one's really obvious, but the one before maybe not so much. If you take a look at the 2020 halving event, we were actually in a very aggressive move upwards when the halving event occurred, and it came after a very significant crash to the downside. So we saw a big correction to the downside, the COVID pandemic, and then you saw reversal occur, and then a halving event, right? So it was very coincidental that we actually had the halving event at that particular moment in time. It's not really something that I think would have happened. I think we would have seen more downside had actually we not had that pandemic crash at that particular moment in time. That crash to the downside, though, was actually quite well within its standard parameters of a three-wave structural move, and it stayed between 1 and 1.236 on the fib scale, which we did not do in 2022, which is something else we have to kind of consider, because we can't think and expect history to repeat itself when we have a different underlined foundation, right? We're going at a 1.382 fib scale rather than a 1.236 fib scale, and so forth. Anyway, I'll go through that stuff probably in a video tomorrow. I spend more time talking about that, so do watch out for that one. Let's go ahead and take this up outside of this, because it's just, I just don't think it's really what's going to happen. Going over into the exchange section, I think one of the strategies that we have to employ during this bear market is to make sure that we have access to as many different cryptocurrency exchanges as possible, right? And you want to make sure you sign up, get familiar with the platform. How do you deposit crypto? How do you withdraw crypto? How do you deposit fiat? How do you withdraw fiat? Do you need to do KYC? Are you leverage? Are you spot? Do they have all the pairs that you're looking for? And keep up to date with them, right? And this is really important because ultimately in a bull market, when there's millions upon millions of people trying to log on to sell their assets as prices going up, some of these platforms do not do well under load. And so you might not be able to log on. You might not be able to transact in the way that that you're expecting to. So having access to more exchanges is a really good idea and strategy, but not just signing up, but also getting familiar with how they operate. How do you deposit? How do you withdraw? Get yourself KYC'd if you need to. Not all platforms will require you to KYC, so only ones that you need to, you'll have to do that. Do you need to link bank accounts? If you link a bank account, does that actually trigger KYC? Are some of these platforms restricted in your countries? Do you need VPNs? And you have to kind of look at a lot of this stuff. It's not easy necessarily, but it's a good strategy to make sure that you have access to many. Right now, 𝗕𝗘𝗪, as you see here on the screen, is my go-to platform. I use this for 100% of my leverage positions at the moment and 90 to 95% of my spot positions. But it's not the only exchange that I have access to. I'm also registered on Binance, Coinbase, KuCoin, Gate.io, Bybit, Crypto.com, and so forth, right? But I found that 𝗕𝗘𝗪 is the one that resonates best with me. I find it very easy to use, very intuitive, and it quickly became my go-to platform. And I think it may become your go-to platform as well. If you haven't yet signed up to 𝗕𝗘𝗪, the affiliate link is in the description down below. If you do use that link, you'll be eligible for up to $8,000 of rewards, depending on how much you deposit and trade on the platform. There are other links also in the description below, so do check those out. And as I said, it's a great strategy to make sure you're signed up to as many of these platforms as you possibly can. Let's move over into trades. We've seen some interesting trades again from 𝗕𝗔𝗪𝗂𝗪𝗧𝒛𝗡, absolutely smashing it. Kind of dominating the trader win area here in our Discord server. Let's take a look at a few of these past couple of days, and obviously last night with everything that was going on was great fun. So let's take a look. We've got a few longs in here. 10x long on 𝗕𝗪𝗪, 91%. We've got a 10x long on 𝗕𝗪𝗪 again at 68%. We've got a long 25x on Rune, 9.23. Then we start shorting, right? OP short 10x, 11.57. We got a short at 20x, 44%, shorting 40x Bitcoin, 20%, 335% on a 20x long, 20x short, on Bone, which is great to see. We can see here as well, Bone USDT short 20x, 145%, 77% on a 𝗕𝗪𝗪 short 20x. 120% on a Bone short 20x. We've got a Bone USDT 20x short 208%, 129% on a 𝗕𝗪𝗪 short as well. So some great trades coming through. And again, this is it's great to kind of see the community doing as well as they are, considering some of the market volatility, right? Some people, I think, have unfortunately not been able to see the opportunities to the downside as in the same way that they've been able to see the opportunities to the upside, right? It's very easy sometimes to get carried away thinking it's always going to be going up, and we go long, go long, go long. And unfortunately, we've seen millions upon millions of dollars of liquidations on the long side of things. But it's also great to be able to appreciate that actually, everything that goes up does have to come down, and there's great opportunities in making money on the way down in the same way that you can when making money on the way up. So it's great testament to the members over in our Discord server, seeing them do as well as they are. We had the pleasure of also meeting up with 𝗕𝗔𝗪𝗂𝗪𝗧𝒛 in Manchester back in December. I want to say December last year as well, which was it was great. So it was great to meet you, and it's great to kind of see these trades coming through in the way that they are. Guys, I'm going to wrap this video up there though, guys. If you have found it useful and informative, smash the like button. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.